Thank you for listening to the Real Estate Voice podcast. I'm Vernon R.E. Jones, managing broker, owner of Jones Homes, and for 30 years we have serviced the 7-county Denver metro area. In celebration of July 4th, we're going to go and talk about VA loans, those veterans that allow us to do what we do here and do what many of us are able to do because of their service. So basically, because of the bravery and sacrifices of veterans and active military, the rest of the country's civilians can live the American dream in safety. As one tangible way to say thank you for your service, current and former members of the military have access to Veteran Affairs home loans. These unique mortgage options allow veterans and those still serving to own a piece of their American dream by potentially qualifying for homes they might have thought were way out of reach. Veterans, active duty service personnel, and select reservists or National Guard members are among those who can qualify for VA loans. Let's kind of go over 5 things that a VA loan can do for veterans. 1, there's no down payment. This is one of the most valuable and touted benefits, and for good reason. Saving enough for a down payment can be the biggest obstacle to buying a home, whether you're a veteran or not. But a VA loan eliminates that roadblock for veterans. Most of the buyers I personally work with that are veterans don't have the extra resources available. So the fact that they can purchase a home with zero down makes the transaction accessible. In most parts of the country, qualified buyers can purchase up to $548,250 before factoring in the cost of a down payment. In pricier areas, borrowers can go beyond that threshold. But beware, the no money down aspect of a VA loan shouldn't be confused with no money out of pocket. A common misconception. A VA loan still requires closing costs and the earnest money deposit, a negotiated amount of money that the buyer puts in escrow to essentially hold the house. However, that money will often come back at the closing when the title company will write a check back to the veteran on the spot for the total amount that was put into escrow. But there are situations that allow that to happen. And we'll just discuss those moving on. Number 2, there's more lenient loan requirements. The required credit score for a VA loan can be lower than most conventional loans. Around 620 for a VA loan compared with 650 plus for most conventional loans. In addition, the required debt-to-income ratio, in other words, what you owe monthly, what you pay out monthly, to what you make monthly, for VA loans is often more flexible than for conventional mortgages. In other words, it allows someone with less than perfect credit and some debt to still be able to qualify for a loan. Number 3, there's no mortgage insurance. Most conventional buyers have private mortgage insurance if they put less than 20% down. FHA loans also come with their form of mortgage insurance. But a VA loan waives that insurance requirement. And trust me, that's important. This can be big savings in monthly payments since private mortgage insurance typically runs around $200 to $300 a month. That's a considerable savings in your monthly payment. Even though we talked about that there's no mortgage insurance, there is a funding fee. The upfront costs apply to every purchase loan or refinance. And it's usually around 1%. And what it does, these proceeds help the VA cover losses on the few loans that go into default. But borrowers can roll it into their monthly payment or pay it all at once. Plus, it's tax deductible. And veterans with a service-connected disability don't have to pay the funding fee at all. Moving on, number 4, limited closing costs. Legally, veterans are allowed to pay for certain closing costs, which include the following: appraisal, credit report, origination fee from the mortgage company, the cost that they charge you to originate the loan, recording fee to record your closing documents, which involves the deed, lender documents, and all else, survey, if required, basically an outline of the property, title insurance to make sure that you have coverage to make sure the property is free and clear of all liens. But there are some fees the veterans are not allowed to pay, and the VA allows lenders to charge no more than 1% to cover the cost of originating and underwriting the loan. So, for example, if the purchase price is $280,000, the veteran might offer $300,000 and ask for 3% from the seller back to cover the closing costs. In this way, the veteran is essentially financing their closing costs into the loan, meaning less out of pocket at the start. Number 5, extra assistance with appraisals. When a home that a veteran is considering purchasing is having trouble reaching the purchase price during the appraisal process, buyers and lenders can ask the VA appraiser to consider adjusting the valuation before making a final determination. Appraisers notify lenders in the event the appraised value is likely to come in low, giving buyers and real estate brokers 48 hours to supply additional information that the appraiser might not be aware of to help justify the home's value. Typically, if I'm dealing with a VA loan, I usually assemble a list of upgrades and improvements that the seller's done in the last 3 years that the appraiser may not have known about and therefore didn't include in the home value. This process gives the brokers an opportunity to assist the appraiser in making sure they have the whole picture of the home, and gives a local broker an opening to help an appraiser to be educated on specific local values. We continue to value our service members for doing the things that they do to keep us safe. And on July 4th, we celebrate them as well. If you're a veteran and you're interested in doing a VA loan, feel free to give us a call at 303-359-8218. Again, I'm Vernon Jones with Jones Homes, and we thank you for listening to the Real Estate Voice podcast. And as always, enjoy the holiday weekend, and please be safe.